Hey everybody, it's Sunday. It's live Q&A time. Thank you all for being here. Big thank you to One Bradham. You rock. So let's go. Bitcoin's at about 22,800. It's been in that range, hovering around that 23K level for quite some time. And I'm just waiting to make sure my video is streaming live before we talk about what we're going to do. But it is good. I always have to make sure there's some sound so I don't talk to myself. So today, in live Q&A, we're going to look at the top questions from you all from the week. And we're going to talk about, is there a safe place to stake Bitcoin? And how do you use a Duress Pin? Self-storage, what is it? Does it work, etc.? We're going to talk about PetroBitcoin, look at the dollar index, going to talk about the Bitcoin wealth pyramid. We're going to talk about an update on Fantom and Solana, etc. So the deal here today is, if you learn one thing, hit the like. 2 things, hit subscribe, and 3 things, hit the bell. That's the deal I have with you all today. And of course, none of this is ever investment advice. It's just edutainment. So first of all, first question is from Vine98. Can you update your Bitcoin ownership analysis and advise if the short-term holders capitulation has affected the percentage rankings in terms of the number of Bitcoin required to be in the top 1% to 5% of holders? Great question. For those of you who don't know, I created this thing called the Bitcoin Wealth Pyramid way back in 2021, and it's changed quite a bit in certain areas. So just a reminder to everybody, the big change right now compared to when I did this last, I think was earlier this year, and I did it for the first time middle of last year, and then I did a November 2021 update. But here, this is the update per 24th of July 2022. And still, it's more or less correct. But I'll talk about some of the changes that actually have happened. And there's a lot of work that goes behind doing this. And to update it, it will require about 2 days of number crunching. But we will do an update shortly. But you can take this as being plus or minus 5% correct. So to be in the top 0.1% of Bitcoin holders, you need more than 21 Bitcoin. To be in the top 1%, you need more than 3.6. It's probably around 3.8 Bitcoin right now. Maybe 4, so it's gone up a little bit, but we'll tell you why in a minute. And to be in the top 5% of Bitcoin holders, you need greater than 0.135 Bitcoin. Now, it's really changed a lot recently is the price. It cost, last time I did this, it was about $1.1 million to be in the top 0.1%. Now it's $479,000. To be in the top 0.5%, it's 155,000. Top 1%, 82,000. Top 2%, 35,000. And top 5%, only 3,000. The top 5% was over $7,000 only a few months ago. So a couple of things are happening. And let's dig into exactly what has changed since we did this last. This is interesting. This is between March 2022 and today. So you can see here, I kind of aggregated where the big amounts of Bitcoin have gone to and where they have left. So you are correct in assuming that the long-term holder capitulation has happened, and they are folks with between 1,000 Bitcoin and 10,000 Bitcoin. They have sold off a lot. And you can see the big chunk that has grown, that is the wallets with more than 10,000 Bitcoin. Remember as well, these don't necessarily need to be discrete people, but they could be family offices, high net worth individuals, sovereign countries, enterprises, you name it, big Bitcoin miners, etc. So take that all, they're not individual people to a large extent, but they can be as well. And so we see here as well, the other cohort that has grown is greater than 100,000 Bitcoin. And there's one new wallet there as well, since I did this last. And before somebody comes out from their armchair and says, hey, the math doesn't add up, remember, we've added about 170,000 new Bitcoin that have been mined since I did this. And that's how this all pans out. Now, to show the breakout between the distribution, you'll see here very clearly all the people that have grown and where all the coins have gone is basically 83% went to the whales. There are people with more than 100,000 and more than 10,000 Bitcoin. That's 65.7% for 10,000, and 100,000 Bitcoin plus got about 17%. And the other cohorts that are growing is those Wholecoiner people greater than 1 Bitcoin, but they don't move as near as much money around as possible. And remember, each time some whale comes in and gets 10,000 Bitcoin, takes them off the market, they are denying 10,000 people the chance to become a whole coiner. And that's the raw truth of this. So in summary, and it is a easier easier to summarize than actually do the analysis, but we will do the analysis, I promise you, but this will tide you over in the meantime. So since March 2022, the majority of coins have moved from 1K to 10K holders, and they seem to have capitulated. That's true. Greater than 10,000, 100K holders have eaten most. A modest growth amongst whole coiners, which is great to see, and therefore I expect you need more than 3.6 Bitcoin to be in the top 1% right now, but we'll see. Again, the more denial happens at the higher levels, things change, but we'll do another update. So thank you for that question. Next question is from Red Eye Cat. What would prevent the Saudis from starting to accept Bitcoin for oil and then offering a discount to Bitcoin purchases on its way to only accepting Bitcoin for oil? There's a couple of different moving parts here. Let's talk about the requirements to be able to do this, which is kind of like in line with what prevents it from being done today. First of all, the stability of Bitcoin price is not quite there yet. Second of all, liquidity is not quite there yet. The global oil market is worth many, many, many billions, and Bitcoin is just not big enough yet to handle that. And third, probably the biggest advantage for Bitcoin is illegal seizures is a big advantage. And of course, it's easy to move Bitcoin around and take it as payment for different types of hard assets and commodities like oil. So that's the good side. Now, the current state of the world is oil is currently beginning to trade for maybe rubles, rupees, and digital yuan, or even yuan. And the petrodollar is clearly in decline. And we'll talk more about the Dixie, the dollar index, as well in a moment. But this is important to note. Russians are trying to deal directly with the Chinese, and they either want to work with rubles or digital yuan. India is trying to work with rupees, and they're trying to get away from the dependence on the dollar. And that's chipping away slowly but surely, but sometimes things happen slowly and then suddenly. So we'll watch this space. Next, as well, not related to Saudis, but Russia. Putin, back in March 2022, did say he is planning to accept Bitcoin as payment for oil and gas. Again, anything to ding the petrodollar standard that's out there, he will do, even if it means, going down the Bitcoin path or crypto path. So watch this space. And in addition, there's stuff also happening in the world in Iran. There is apparently a lot of oil-powered Bitcoin mining, and Elliptic estimates that 4.5% of all Bitcoin mining takes place in Iran. And this is helping them circumvent different types of sanctions that are in place right now. And we'll see where this goes. But maybe Iran also could accept, not only mine their own Bitcoin, use that Bitcoin to pay for stuff that they are blocked from buying on the outside world, but also selling their oil for Bitcoin too. So again, dominoes chipping away. It's going to happen, but that's kind of the status of the world right now. I don't think the Saudis are there just yet. And what happened in the last week has been pretty shocking to me as well. But I won't go there. Let's talk a little bit about Fantom. This is from Shiba Godzilla. Do you still like Fantom as a sol hedge, or is there something else we should be considering? So let's dig into Fantom pros and cons, quick summary. And before I go in, this is just numbers, okay, the stuff we look at. So first of all, the pros. Fantom now has more daily active users than Avalanche and Cardano, which is good. It has a very good smart contract platform composite score that we build. It's top 5. And it has increasing daily transaction volumes, which is good considering the down market, but not that dramatic. The cons, however, are user growth has declined since the start of 2022. The Conjay departure in March 6th, I think it was, left a sting on the chain, and the roadmap is uncertain. The compendium score is mediocre, and they advertise. They're advertising in many different places, including Formula One and others. And as you know, if you know me, I don't like chains or companies that have to advertise. It means their product is not good enough itself. It doesn't get virally adopted, and they are the things you need to chase down yourself. So let's talk about one thing first before I go to the next slide to answer your question. And this, I hope I have cracked the code on crypto tribalism. It is what some people call bulverism or psychogenetic fallacy. And this is inferring why an argument is being used, associating it to some psychological reason, and then assuming it is invalid as a result. The easy way to describe this is instead of assessing an opponent's claim on its own merits, some people instead diagnose them as having a certain bias or prejudice that motivated them to make the claim, and therefore they take the opposite argument. Now, the people that don't understand what I'm saying, maybe will never understand, but this is why I show the next slide. And people need to understand this. So we here in this channel, we make all decisions based on data, nothing else. And we do not fall down this fallacy path. So these are the words from CoinDesk 3 days ago, not my words. And you can see here Solana new daily address growth outpaces other blockchains, etc. And what they say in this words, the effect of most other chains are shrinking. From a daily active user perspective, Sol is growing. Active wallets on the Solana network increased 58% this year, outpacing all other blockchains despite a market-wide price decline. And daily active wallets have similarly climbed this year with over 32 million active users in June, 37 million in May, and that's an rising by 20 million just in the first 4 months of 2022. So in my opinion, there is no need for a hedge. There's one I always talked last year as well about black holes that eat everything. The leaders, people flock to the better, best, cheapest, fastest, etc., despite some of the issues that the chain has had. And follow the developers, follow the users, follow the transactions, follow the data, follow the money, and then you get your answer. Okay, so I don't think there is a need. The long answer, a need for a Fantom hedge. Good question, though. And people yesterday said, talk about Solana. Well, again, look at CoinDesk. They're talking about it too. So next question is from Kevin BH. Can a multi-billion-dollar hedge fund borrow 100,000 Bitcoin or more from an exchange like Coinbase, Gemini, and OTC market, then dump on the spot market while shorting and profit and repeat the process? So this may have been triggered by my wallet number 3 video, whale number 3, whatever you want to call it, and how all that stuff was dumped and how I believe was moved to a Coinbase wallet. So maybe wallet number 3 was Coinbase all along. Who knows? Maybe they're in cahoots with somebody that's doing something like this. But first of all, let's dig into this real quick. This would be blatant market manipulation, which is illegal. And hedge funds are closely watched by regulators. And if a hedge fund were to do this, to borrow $2 billion worth of Bitcoin, you can bet the SEC would be knocking on their door. And if they were to dump this Bitcoin in a market manipulation scheme, the folks at this hedge fund would find themselves in jail. So second of all, you know, to borrow 2 billion of Bitcoin without putting down some serious collateral is tricky, but we've seen that it does happen out there as well, despite rules and regulations. Now, I personally believe this still happens. It happens on a smaller scale. The market is manipulated, but rinsing and repeating is getting more and more difficult for people to do out there. So it is a strategy. I do believe it's used. I do believe it's done by people offshore, not in the United States, but not on the same scale. Like I proved, I think it was last year, that it only takes about 3,000 to 4,000 Bitcoin to dump on the market. You have to wait for a quiet time with low volume, like a Sunday evening or something, before Asia wakes up and do it then, or a Saturday night. And that's when it happens. So the question is, if it's a hedge fund, US-based hedge fund, not likely. If it's a manipulator from overseas, probably. Great question. And it'll continue to happen, but it's hard to repeat because people get very smart to it. And we saw it last year as well. Whales were dumping a large amount of Bitcoin on the market, and they were being snapped up and sniped by people before they could buy them back. So again, that's one of the reasons as well. It's very important to look at the option action on these chains. So next question is from Sam O. I've studied hardware wallet videos and I understand and can act on tips like the Duress Pin, etc., but wondered about the specifics of the dummy key concept. So interesting question, and hopefully nobody will ever have to use this, but this is a quick description of what it is. Using Trezor, and many wallets, Cold Card, have this feature as well, and a few others. But basically, Duress Pins are protect yourself against being compelled to, against your will, to unlock your device. And there are several types of pins. Most wallets do have this functionality. And first of all, if somebody is compelling you to unlock your device, you can utilize the Duress Pin to do one of two things. One, it'll wipe your device, or you could use a separate pin to open up a decoy wallet or multiple decoy wallets. So you could have, imagine you have, say, 10 Bitcoin on the same wallet. You could have a separate wallet on the same key cold storage device, and you could have a separate pin for it that would show 1 Bitcoin instead of 10, or half a Bitcoin or whatever. And that's basically the idea here. As we'll see, but you can set these decoy wallets up, pre-fund them with a little bit of crypto. If you're under duress, you can give your assailant the pin or multiple pins that open up your decoy wallet. And then they can steal all of the funds in your decoy wallet without having to discover your real pin to unlock your real wallet. Again, even if they run off with the wallet itself, it's hard to pull it out and then just have your seed phrase in a safe place, pull it off, move it to a different device as well down the line. So that's kind of the idea. Again, I hope this never has to happen to anybody, but it's a good safety measure to have as well. And again, most wallets have it. If you are buying a wallet, make sure it does have this feature. Next question is from Bad Dog. Is there a safe way to stake your crypto during this crypto winter? It seems like we're losing platforms left and right. Yeah, it's truly a strange time. So it's a brilliant question and a very timely one. The short answer is nope, there is not. The long answer is staking and yield farming is all risky. People are still doing it. It's like, oh, I can get 24%, or I can get 30%, or I can get 15%. But remember, the risk you assume for providing liquidity or locking your tokens away on a protocol is what you were getting paid for. There is no such thing as a free lunch anywhere, especially in crypto. So first of all, when you talk about CeFi platforms, they are without question among the most risky, as we have seen with the collapse of all of the biggest CeFi platforms in the space pretty much overnight. And you have to give up your keys. The platform rehypothecates your crypto, etc. We always said never, ever, ever put more than 10% of your bag in one platform for these obvious reasons. And that's it. And we've seen what happens. So second, providing liquidity to DeFi lending protocols may be just as risky, especially depending on its liquidity and which L1 it's built on. And we've seen how quickly these can implode as well. And that leaves just one option, and that is L1 staking. And that's probably right now at this stage, not financial advice, but the least risky of all the options. And when you stake the token on an L1 protocol, you're basically providing more security to the network. So the easy way to think about it is when you stake, or keep this in mind, if the ship goes down, the passengers get life rafts while the captain goes down with the ship. When you stake, you're essentially electing to be captains rather than passengers. So choose your L1 wisely, as well as your staking pool or your validator or whatever when you do this. But again, better safe than sorry. Asset preservation first, alpha second. So good timely question. Next question is from Walter. Should we reach a point where all exchanges will be shut down, go broke, etc., and who will swap or trade our in cold storage tokens or assets? So first of all, again, every week it never ceases to amaze me how aligned a lot of the questions are and what people are thinking. It is truly amazing. But first of all, exchanges are simply a place where buyers and sellers meet, and the exchanges make money on the transaction fees and the spreads. And the more and higher the value transactions that occur on the exchange, the more money they make. And you don't have to worry about them rehypothecating your crypto or going broke and doing that. Now, in the old days, there was stuff like Mt. Gox was the only Bitcoin exchange. It did collapse, but Bitcoin continued on fine. So when we think about where we are, exchanges can go out of business. Be very careful. Make sure you work with the exchanges that are most regulated, largest, most reputable. Look at the management teams before you make any decision. But in answer to your question, eventually, whenever there's an opportunity, more exchanges will spring up. And that's just the nature of the beast. If there's money to be made, people will invest and build one. And it's also becoming a very competitive environment right now. And even if all the exchanges were banned by government, there's also still a way to exchange through wallets in things like decentralized exchanges, DeFi exchanges as we go forward. There's also ways to do it OTC too. So don't worry about all exchanges going broke. It's not going to happen. There's lots of money to be made in exchanges. Look at the money that Coinbase made in Q2 of 2021. It was outrageous how much revenue and profit they made. And now they're jacking up their fees again to 4%. So they'll make a lot of money if anybody's still trading there as well, which I think people will find cheaper, better options, just like what we spoke about with blockchains earlier. So next question, Andrew C. I hear you say that you pass on a 401k retirement account. Saw a documentary that said the average household pays $155,000 in 401k fees alone, losing up to 2/3 of their retirement. Is it really a ripoff? So first of all, I didn't see the documentary, but I did look up the article, and it's true. These numbers, 155,000 up to 2/3 of your amount in fees, get eaten away over time. But back to me, a great quote from Rob is, my goals are not your goals. I did not want any money when I was 65 because both my parents died young. So it didn't make sense to me. What's the point in having money if you're, not going to live that long? So that was always my mindset at a very young age. And I also needed it young to invest. I felt I could outperform mutual funds by trading myself and use proceeds and gains and profits to buy real estate. And that's been my entire playbook for my life. Plus, I also never liked the idea of having money locked away. But again, if you're going to make a decision, please talk to your financial advisor, but I'm not that. But this is a beautiful little representation of kind of how I would have felt investing in 401ks. Is one, you give up control of your money. It's locked away for a long period of time. If you pull it out, you suffer penalties. Number two, a lot of funds during my time, they were having these weird target date funds instead of financial advice. It's like, yeah, this is the 35-year fund. So if you're 30 years of age, this is what you invest in going out, 35 years. Like, who can even think in that time frame? And second of all, receiving advice from people who are in sales, little or no financial experience, I thought was silly. So I never liked that. Now, back to your question, is it worth it or not? Again, yes, like there's no such thing as a free lunch in crypto. The 401k is not free. Average American does lose 155k or 30% of the investment to 401k fees. Why do you think there are huge companies like Fidelity with massive buildings? Where are they making their money? The answer is off your back. Now, there was a study by Demos, a policy research firm, and it did find that all to be true. 1/3 of your fees, etc. Where do the fees come from? Well, these include fees paid to managers for managing the investment in funds. They're typically charged as a percentage of assets. It can be 1 or 2% per year, sometimes more. And that adds up over 20, 30, 35, 40 years. Administration fees of 401k, the administrators take their cut as well. And then there are service fees when it comes to taking your money out or moving to a different plan or moving to a different fund, etc., etc. All these things add up. So yes, 401ks, it depends on your goal, but there is one caveat. If you are not a sophisticated investor and you have an employer that matches, say, if you invest 6%, they give you 6%, take that money, then move it whenever you can to a self-directed IRA or some type of IRA platform or whatever you have in your jurisdiction around the world, and then manage it yourself or invest in what you think is important. So that's kind of what I would do, because if your employer is matching your contribution, that's free money and you should probably avail of that as well. So even for a part of it, for that nest egg for when you do retire. Great question. Let's talk about the dollar index. Question from Duncan. Dixie, outlook for the next month or so. Any resistance before 120? Can Europe keep the lights on? And might US earnings season be better than expected? Bit of a loaded question. I'll tackle the earnings season. So far, so good. First week is down. Next week is big. If you get through some of the big names next week, you got Apple, Microsoft, etc., that will set the stage. But I do believe, related to your question, the dollar index, the dollar strength will hurt them because they make a lot of money from overseas. So that could hurt their earnings. So be careful of that. But back to the question on the dollar index. First of all, this is what it looks like. A quick refresher. The dollar index it was formed, I think, 30 years ago with a base value of 100, and the strength of the US dollar is always measured against this base. So if the Dixie goes to 110, close to where it hit almost, that means the dollar has gained 10% against the currencies in the basket. And if the Dixie is 90, it's lost 10% against the currency in the basket. But keep an eye on that big blue European flag. That makes up nearly 60% of the dollar index. The Japanese yen is stuffed. British pound has some issues. Canadian dollar, yeah, they have some issues too. Swedish krona is probably fine. Swiss franc is very strong. But Swedish krona and Swiss franc are very small, only making up 7% of the basket. So you can't really rely on that. Let's look at the chart real quick for the Dixie. Here, you did see the Dixie, the dollar index, react to the ECB hiking, and it came down off 109 down to about 106. And it did take some steam out of the dollar index sales. But remember, as the US dollar strengthens versus other currencies, this puts pressure on countries who have dollar-denominated debt. Think payments for oil or energy or debt or whatever. And also, American consumers benefit from cheaper imports and have less expensive foreign travel. I know tons of Americans that are flying to Europe right now and Italy because it's cheap. But at the same time, American companies that export or rely on global markets for the bulk of their sales have been hurt. Nvidia is one of those. Microsoft will be one of those too. And we shall see next week in earnings if this will bring about some weakness. This will also explode the trade deficit over time, which isn't a good thing. So resistance, yes. A lot of people are talking about it going straight to 120. I think that would cause a lot of problems for not only foreign countries, the basket of currencies in the dollar index, but other items as well. Again, it has pros and cons, but it has to stabilize. It has to mean revert. And right now, we are out there in no man's land. This is a little Bollinger Band with a couple of moving averages on it. You can see it's in a place where it doesn't really belong. So we'll see what happens. But if it went to 120, we'd have some big structural problems happening. So I think it'll hover around 109, down 106, and then eventually gradually mean revert. But remember, the problem is the dollar is benchmarked against a basket of other bags of poop. And those bags of poop are worse than the dollar bag of poop. So it's the least worst solution out there. And your final question, can Europe keep warm this winter? This is a sad story, but it really, it's a bit of a cop-out, but it'll depend on the winter weather and how harsh it is. It'll also depend on the impact of prices curtailing demand, rationing imposed on industrial companies that burn a lot of energy, and also what China does and how much they are beginning to suck up the liquid natural gas, LNG, from the world. So that's the question. I don't have the answer. Hopefully get peace in Ukraine. But in the meantime, fingers crossed, ration, save up, and hope it's not a cold winter in Europe. That would not be good. Next question is from Neuroclock. Do you think getting a real estate license is a good way to get into real estate investing? This is a brilliant question because this relates to my journey. Back in the 90s, I actually took all the exams because I thought it would be good. I studied, took the exams, but never got my license. I was too busy and too lazy to file the paperwork. But being a realtor, it takes time to get established. And earnings are not that good unless you're in the top 10%. I know top realtors in top markets, and they make millions, but they are few and far between. And also, in terms of work-life balance, you lose your weekends as a realtor. It's a tough 7-day-a-week job. So be aware of that going in. Now, the question is, do realtors make money? The average real estate agent earns in the United States, and this data is 4 days old, $45,990 each year. But the range of income is massive. So 1/10 of real estate agents earn less than 23 grand, and 10% earn more than 110 grand. And again, I know people that earn 7 digits from real estate business. So, but they are like the top 1%. If you're in the top 1% of anything, you're going to do really well. So, but think about that. The question is, do you have the desire, the heart, the hustle to do that? My attitude before I wrap up is I think you can learn everything you need with books and online. You don't need to be a realtor to be a real estate investor. And I think it's probably nearly better to approach it from the construction, property development side than from the slinging of real estate side. In addition, there is a point of saturation. Despite the great resignation, tons and tons of people became real estate agents in 2020 and 2021. And that was nearly 60% more than the previous 2 years. And there's a surplus of people coming into real estate, and that means it's even more competitive. So when you have hundreds and thousands of people in different states chasing after the same amount of houses and listings, and you have a slowdown in the real estate market, definitely not a good time to consider it. So take that as you will. I do believe you can learn everything you need from books and YouTube. No need to become a realtor unless you have a passion for it. But if you do, make sure that you're in the top 10% of performers. That means you got to hustle 24/7 for 5 to 10 years to get established so you can get all the listings, because that's where the money's made. Next, our favorite part of the week, your contributions, our donations. We adopted 8 puppies: Legion, Woody, Kit, Frankie, Knots, Trinity, Pudge, and Raquel. So big thank you all. With that, we're going to open up to some questions. So hope you guys learned something today from this session. Really, really good questions. And I hope I'm not, 35 minutes to get through that. Let me see. Pulling up the questions. Yes, I got them. Thank you so much. Thank you as well to the moderators and the people behind everything here. So one Bridem, I'm trying to rebuild my Bitcoin bag after Celsius. Would you recommend getting GBTC or MicroStrategy to build it up faster due to discount? So one of the things that I've been looking at is the absolute volatile range in which MicroStrategy plays over time. It is absolutely staggering. If you just look at the last month, MicroStrategy can go up 10% when Bitcoin goes up 2%. And it does always gets overbought and oversold due to long and short positions. So if you are a trader, I would definitely prefer MicroStrategy over GBTC. Ever since GBTC got denied the spot ETF approval, I got a little bit nervous. So I would think of, trading Bitcoin in the ranges. And even if you look at Bitcoin itself over the past, let's look at the 5 days, easier to see. It just goes up and down, $600 to $800 with great regularity. And that can be an opportunity as well to play around. But it's hard to say. I think also we're in the market where it doesn't make a lot of sense to hodl anymore. I think the whole hodl term is dead, but just buy cheap, wait for it to be overbought, sell, wait for it to dip again, buy cheap, etc., and keep it on as you go. So I hope I don't have a silver bullet for you, but that's one of the things that I was kind of practicing a little bit as well. And also diversify. Don't just all be in on Bitcoin, but think about things like Tesla as well, which is my hedge to my Bitcoin. I play one off the other. Hello, I'm Nate. Do you think it's possible that we are not entering a recession, but another depression? No. I think we're in a different world order where, QE to infinity will always be there. It's not popular for elected officials to spin an economy into depression. I think there is definitely a macro backdrop that could lead to that. But I think the recession will be short and not too deep. So that's my hope. And I believe that will be aided and funded by a slowdown in quantitative tightening and maybe a slowdown in rate increases and reduction in interest rates as well. Once they get proof that Q2 recession, our Q2 GDP growth is negative, that means recession's in the box, then they have to start doing things. The problem that the Fed have right now is, the employment numbers are very strong because of the great resignation. They think they're very strong. But if you think for a minute, 3.6% of people are unemployed in the US, I think they're very wrong. So let me see. Next question from Brian Lashley. Are you surprised Solana and Kraken didn't fail like others? And would you be comfortable putting any Solana on them? Solana, no, because they played some interesting games a month or so ago. And remember, what a DApp does on a blockchain is nothing to do with the blockchain. There's 1,000 dApps on Solana. So whatever people build, they can do whatever they want. Kraken, Kraken, there's things about, I can't remember, is Jamie at Kraken. He's an interesting fellow. He said some things that I really agree with recently. Maybe they are managing risk, but I think the best place to stake, like I covered in the video today, is probably staking directly on an L1, not on an exchange. So I just think right now, until all the clouds have cleared, and it looks like most of the liquidity has been flushed from the system, it'll be time to just be safe and wait till things stabilize again, and wait till some of these exchanges are more transparent. But there's just so much FUD. You know, I was getting FUD articles from a whole bunch of exchanges over the last couple of days, and I try and validate the sources. I can't, but there's tons out there, so just be careful. Jug 7228, is now a good time to invest heavy into Solana. I can't give financial advice. I have been buying myself, in full disclosure, and there's only two cryptos I'm buying, and that's Bitcoin and Solana, and I still stay steadfast on my strategy, which has been in place since early 2021. Identify the winners early. You know, the problem we have with Solana is it went from a very low price, I think it was at $20 in June 22nd, 2021, shot to 260 and right back down to 30 or so. And that caught a lot of people in things like FOMO, etc. But right now, at this price of $40, I think it is right now, when it was at 260, the question is, will the market recover? Yes. Will it take time? Yes. It might take another year, year and a half. But when it does, will the winning names, if they remain winning names, again, I always say tap dancing shoes on, because things can change. And we've seen that happen actually with layer ones. We've seen daily active users tank for certain chains, become almost like ghost chains in the space of 2 or 3 months. And we've seen other chains explode. So again, do your research, follow the data. Think of a blockchain like a shopping mall. It's really crude, but it works. And that's the way we look at it. Look at the breadth of stores inside that shopping mall. Look at the foot traffic. Look how much that foot traffic spends. Look at what they do. Look at the security, the fees. All that stuff is very, very important. The amount of transactions per second, per day, per month. And then you have your answer. Todd Craig, what will be the institutional money come into this cycle since we lost a bunch of 3AC, Tesla, Voyager? Tesla made money. Tesla's up a lot over the last 12 months. So is Solana, by the way. So I don't know why Todd Craig, Tesla is in your list. So, because it's very hard to lose money on Tesla. What will be the institutional money to come into the cycle since we lost a bunch? I don't know. I think right now, Sam Bankman-Fried seems to be buying up all the cheap sales out there. He is in BlockFi. He has funded Voyager. Apparently, he said he was going to give people a way out of Voyager and fund that as well. I think the change here, which the silver lining of all of this, and this relates to the question from Brian Lashley above regarding Solend, is the true... Well, you could argue that Solana isn't fully decentralized because of, again, what they did 4 to 6 weeks ago. But the decentralized exchanges, the true decentralized financial applications, they are humming along. Look at the Aves of the world. Look at the Uniswaps. They're crushing it, and they continue to do so. So I think the institutional money that comes in next, CeFi is dead. They're not going to trust idiots like the people at 3AC that, you know, lost their shirts by doing stupid things and buying $50 million yachts with investor money, etc. I think all of that will not be trusted anymore. There might be another shoe or two to drop, but most of it is gone and flushed out. I think institutional money next will look hard at decentralized finance in a big way. That's just my take. Matt C., where do you stand on the possibility of ETH eventually having a bigger market cap than Bitcoin? Do you see a scenario where that could happen? I do. It's definitely possible. So if Ethereum start really figuring out a lot of their problems, start ramping up their TPS, which they can do now with Matic as a layer 2, and start getting more adoption, and then the market really appraising Ethereum for what it's doing and how much it's transacting, it could easily flip Bitcoin. But that's going to take another 2 years, 3 years. The other thing that ETH has, apart from, the regulators consider it not a security, which is good. They haven't defined what not a security is. That's a good thing. Is the fact that it is going deflationary. I think I covered that yesterday. And after the merge, it will be deflating by 0.5% to minus 4.5% per year, which is kind of staggering. And if, as ETH is required to transact on the chain, that will drive up the demand for the token, which could bring about a big supply crunch. If that happens with huge adoption, yes. The problem is what I call the murderer's row of layer ones are nipping at the heels and taking away market share. Just look at the NFT marketplaces. Look who's winning that game right now. That is the real problem. So yes, it's possible. Is it likely? I don't know. Like when I look at the relative value of Ethereum on a market cap basis to how many daily active users it has, to how many transactions it's processing, no, it's overvalued, in my opinion right now, compared to other layer ones that I see. So I hope that answers your question, but yeah, possible, but don't hold your breath. It could take years, if it even happens. And final note on that, because it's a big meaty question, Matsy, is Vitalik Buterin said after the merge, Ethereum will be 55% complete. It took them years to get to the merge. Years. How long is it going to take them to do another 50%? Maybe more years. And one of the issues with technology is you have crazy legacy that hamstrings you. It's like an ICE car manufacturer. You can't underestimate the anchor that legacy technology is and approach is. It's like, think of some people have the analogy of trying to change the wings on a plane when it's in flight. That's the challenge that Ethereum has right now. And there are upstart chains coming in a few months that could literally revolutionize things. We've also seen the lack of loyalty between users. Sorry to ramble on here, but people flick from one chain to another if it's better, cheaper, faster. Bombiggy, stuck in traffic. Just want to give a shout out to Benem Torsia for getting rid of a lot of IA scammers. Love you all. Yeah, he is amazing. Benny, thank you for all you do. Bombiggy, thank you for all you do too. You guys rock. And yeah, scammers, I've noticed, everybody, they are on the rise. We had a community member message me saying, hey, you WhatsApped me. I didn't expect a message from you. It's like, no, I'm not going to WhatsApp anybody. I don't have the time. So the scammers are really upping their game, going after people, promising them extraordinary stuff. And people are vulnerable right now. Again, I think it was like Todd Craig says, trying to get back. Everybody's trying to get back. We will get back. But remember, no such thing as a free lunch, fast buck. Scammers are everywhere. Trust nobody. Okay. I myself was duped by Alex, and I'll never forgive myself for that. But it can happen to anybody. So be careful. I always said, don't trust anybody. And we can all be fooled. So be highly vigilant. And Bad Kitty DC, for James K, the mods, thank you for what you do. You guys rock. And thanks again for your super stickers as well. Dog1, AC1, Artem, Jeff Hammer. You guys are all amazing. Have a good Sunday. And 1883. That sounds like something special. Thanks all for being here. Happy Sunday, and I'll see you all tomorrow. Appreciate everybody. Thanks, Sayad, as well. Good to see you.